Good morning, good afternoon, good evening, good night, wherever you're at. And I'm here with another video updating you guys on Bitcoin, possibly other coins, and maybe a few other things. It all depends. As you guys do know, I do not script my videos, they all come naturally as they come. Sometimes I might have something in my mind to talk about, and then I switch to a completely different topic and never get back to what I was planning to say. So sometimes you guys will have to hear that in future videos. So let's get to the point. Bitcoin recently has reached 42,000. There it is, 42,316 bucks. If you look at the next candle over, it even bounced higher, $42,494. So almost hitting 42,500. We were only about $6 shy. What is next to come? As you guys probably watched my last two videos based on forecast and update of Bitcoin, you guys see I kind of been with this candle a little bit too high. It almost feels, as I'm looking at this, I need to shift it all to the left by one day. The day that I actually had a hard time seeing, maybe it threw me something off. I have no clue. End of the day, I just a messenger. Definitely there's somebody out there that actually needs this information. So as I shift it to the left, I'll also try to see if I can drop it and adjust it accordingly. So let's see right now how does that really look. I readjusted it, that candle. Let's see if I can bring it to the front so we can visual order, bring to front. So as you guys can see right now, I brought that candle to the front and I adjusted it at the top where it actually had its high, brought it where we were, my candle was slightly short of the low. Now, as we can see the other day, and look how accurately that turned out to be. We did bounce a little bit higher, but it also have dropped and my candle slightly short of where it was at low. But as we can see, we are battling. So let's see again, what was the next forecast? The next forecast was we going to go high again. So let's shift it all to the left and I'll try my best not to move it. But as we had to move this one about $500, so if we move this one $500, we actually going to be sitting at 44,000. And then we need to move this one as well. And this is actually about what is the future forecast. As we have moved this one $500 down, I am not going to move these yet, but we do need to count that into plan that when we had these at 44.5, 44.7, 8, we might actually break through 44 and might not make it to 45 or 44.5 or 45,000. So just keep that in mind. We will have another pump. It's probably going to happen in the next 24, 36 hours. Then we'll have another period of reconciliation, or how's that properly said? I do apologize. And then we probably will have a return. So this is something to take in account when you are trading Bitcoin or altcoins. Now, something I noticed next in the last 24 to 48 hours. When Bitcoin came up to 42,000, almost none of them responded. Very few only actually pulled up, and most of them, those that did pull up, they were actually would have jumped either way. Would the Bitcoin came up, or would have stayed at the 42,000? At the 40,000, they would have still came up. They were just due for that came up. So the two coins that actually did possibly responded or just were due. I don't remember. I actually mentioned them in the last video. But let's see what actually has changed in the last 12 hours or 14 hours. Most as you guys can see, Bitcoin has dropped 1.5%. Matic has dropped 1.5%. Actually, Matic would be a great point to enter into the trade as it already started climbing before it hits. A lot of people ask me, especially when I'm talking with them, to Discord. Question: how do you trade when you enter? And here's my simple, easy answer, and it will actually surprise you guys. Or how am I moving to trade as I'm recovering some of my old forgotten stuff, looking through my computer hard drives and looking some of the notes through from a training in 2008, plus actually taking and looking at what charts are telling me, whether they're actually speaking loudly to me, what should be traded, how it should be traded. I will be doing a separate training video on this in detail, but kind of give you guys an idea. So let's say we're talking here about Matic. So I'm going to actually create a couple tunnels so you guys can actually see what would be the possible trading range. Where are they? So the first tunnel, I usually don't take too far out to the bottom. I try to actually take it more where it's more realistic. So I'll start here. Oops. And create myself a trading range. And trading range will have two targets. Target that I want to trade in, and so now I actually have this two target trading areas that I would like to actually trade in. We do also have a third target, which is actually target of the last high. So what I'll actually do is, since you want to kind of have a slight idea which direction the market goes, we are having algo alert. We have reached high that I was talking about. I got an alarm, but I'm already in algo and I'm already doing about a $4 in profit. So I'll right now in that case, I'll try to look for this breakout. Hopefully, as algo scheduled for the breakout. And as algo scheduled for the breakout, I will see if I'll take advantage of that ride to the top. So let's go back to Matic as we were talking about Matic and trading possibilities. So my simple trading possibility is I want to buy as low as possibly can. First of all, as we kind of were talking, we got a lot of runoff. You want to kind of get a rough idea of which direction the whole market is moving. As we are right now seeing, the market is moving to the top, which that means we might have a possibility that might actually just to be the top. So would you actually like to trade a breakout that actually goes nowhere, like this breakout right here, or this breakout right here? No, definitely not. But isn't that what most traders are being trained? Hey, comes up, comes down, grab it on, move it on. And what if that actually was a came up, came down, created like as if it's bouncing, you got on, and you just went back down. Now, But you also missed all this ride up. Why give it that away to the market? Now, you do know that this trend has a potential going up, which actually, if you look at every single candle, this is how many opportunities you had of going up. So let's say one, two, three, four, five, six. In between, if you bought every single time these lows, then let's count the lows now. One, two, three, four, five, six, 7, 8, 9, 10, 11 lows that you could have bought. That's just on a daily candle. If you guys start going towards the 4 hour candle, towards the hour candle, you can actually count even more of those. How many opportunities you actually had to actually ride it and get it out and get out. So, very simple. So we're gonna try to see, and we want to get in within 20% of the whole trading range, within the low 20% of it. So anywhere from touching the line to about, let's say here, you would actually try to jump in. So now, if we start looking from the left to the right, and I usually do not start trading the first one or two bounces because I want to actually get a feeling and see how we're going. Unless you want to take that risk, when it's still possibly possible to take that around, because we were just talking about these lows that you can actually trade. So you don't really have to. All you have to do is just see, oh, possible this is the low, get in and get it right. So as we are moving to the top, first, trading short, very, very risky. If you get caught in a trade and you do not sell, you're screwed. Now, my rule is to not sell anything that's at the loss unless it dropped more than 5%, 5 or more percent below your entry price. Or you know for sure the market is going the opposite direction and is going to leave you behind. It's not coming back in the next couple of weeks to the price where you entered. Only in those two conditions that you actually sell at your trade at loss. Now, when you don't sell trades at loss, let's give you guys an example. Let's say 4 weeks ago you purchased a long and it went against you. And if you decided, okay, I am not going to sell it at 5%, but I also have a feeling we are coming back with the next couple of weeks. So you say, you know what, I'm gonna stuck it out and I'm gonna reduce the I'll reduce at the my risk. So let's say you had a $5,000 trade, and let's say you reduce the trade, let's say to a $2,000. Now you're saying, you know what, $2,000 with a $2,000 risk, I can actually handle taking a drop, still have enough of money to get in at the bottom and actually double my trade and get my money back and actually increase my trade when just by it getting to where I actually originally entered. So you already actually almost doubled your money just by doing that. Now, when you came to that price, you immediately broke even. But look at it right now. If you stayed in that trade, you reduce that trade somewhat so you can buy it lower. You bought it lower, which average trade right now, entry is about right here, but we still can consider as if it was right here. So that lower came up to here. You already had that half the amount that you sold. You already had a good growth on that. You also recovered your money that you were going against you. Now, from here, as if you never gotten out, but you already have already all this profit on top. As if you never gotten out and you continued out and now you close that trade. Guess what? You're not just in green. I mean, you're actually in positive, but right now you actually have quite a nice positive. So also it's very important that you consider, can the market come back in the near future? See, a lot of us, we panic and we get in and it starts going out and we get out. We get in, not going in our favor, we get out. We get in, it's not going in our favor, we get out. We get in, it comes back, we don't cash out. It's come back, we get out. We get in, it's not going in our favor, we get out. We get in, not going in our favor, we get out. The same thing as if you would have stayed in that trade. You lost about the same amount of money. In some cases, you get out lower, you get in higher, and you're still. So sometimes you actually can lose double the amount than what if you would have stayed in the trade. Now, the difference is you got in, you got out, you got in, you got out, you got in, you got out, and you just got out right here again. Now, and that's what's very popular. People like to buy in at high and sell at low while they're going long. Very popular mistake because they're trading breakouts. These tips right here, they get into the tip and then they get out at the low tip. They get into the high tip, they get out of the low tip. They get into the high tip, they get out of the low tip. The opposite of what you should be doing going long. But they're hoping for that huge run because that first trade when they came into the market that they did, they caught on into that high, and that high just took them to the moon. So now they consider every single breakout is a takeout to the moon. But what if market did that on purposely when you came into the market and actually gave you that first run to the moon so they can actually empty you out on a run down? So let's say you got in, you got out, you get in, and you're right now $5,000 upside down. Now you start repeating the same process again. Oh, it's taking off. So you jumped in right here. You took that ride and you kind of felt, oh, I'm already in good profit. I'd rather secure my profit instead of, having a reverse again like it did right here on me. So you got out right here. You lost that opportunity of the trade. So you're like, oh, as it continues right, you're sitting on it. You're kind of, I should have not sold it. I should have not done it. I should have, I should have, I should have, I should have. You guys know what I'm talking about, the should have that's going on in your head. So you buy in at the top. And you start writing them back down, and you're like, oh no, I made a mistake. Again, they tricked me into buying a high. So you get out somewhere right here. So you start on the next day. It start running up. You're like, I should have. You jumped into the high. You write it out. You get, as you're writing it down, you get out somewhere out here. You're like, I shoulda, and I shoulda just been taking money away from you. So we can move on to the next day. As this thing is climbing up, you get on it, you take a ride to the top, and you're like, this time, last time I did it, I got out too early. I'm gonna stuck it out with it. You're sticking it out, and and you're like, I'm gonna go into the next day, and it starts reversing. You get out, and boom, it actually took that right up. I'm just guys giving you an example. What mostly it happening, how the system is designed. That's why I say 5% is a minimum, at least minimum. Because if you took 5% minimum, and let's say you got in here, you would have been riding all the way to the top until you said, you know what? I think it reached the top. I'll cash out and wait for a drop and get into another one, or look for another coin that actually still has not traveled up. Because see, if you got in it right here, and let's say you didn't even get into the bottom, you got in, right here, and you took that ride. You never had the 5% return. You took advantage of that. Now, let's say you got in here, right at the top, which I don't recommend. I recommend getting the at the low. But if you took that right there, and we're going to calculate 5%. Let's say you got in there. Your 5%. I need to turn this off. Your 5% roughly would be in this area here on the next day candle. Now, remember 5%, or if you don't feel that market is coming back, I prefer saying you don't, you feel, but but not everybody can survive a 35% drop. So that's why I allow that 5%. Otherwise, I would actually completely remove the 5% and say, hey, the only time you close your trade in red if you don't feel it's coming back. But for those of you that need the 5%, go ahead, lose some money with 5%. But that's just something I just sharing with you guys. So now let's get back to the tunnel trading. So this trading is very good concept also for swing traders that are trading, uh, taking trades on high, running low, taking trades on low, running high. Which again, for swing traders, I would not recommend taking shorts unless you for sure know that you're going down. Otherwise, you only trade ups. That's taking longs. So now, what actually we going to do in this trade platform? We are not, since we are in a positive trend, and we are not guaranteed that this can actually come down. And as we all know, there's very limited guarantee. I know we can look at the hip, neck, head, and say, "Oh, we're at the top. We're actually coming down." But I'll be asked to tell you one thing. Let's say you are doing this at 8,000 on Bitcoin, and right now the Bitcoin hit 65. Can you guarantee? And you took actually short, and the Bitcoin is going up. Can you guarantee that the Bitcoin will come back to 8,000? The chance of that is less than 1%. Now, if you took a long at, let's say, at 40,000 and Bitcoin dropping to 20,000 or even 8,000, what are the chances that actually this the Bitcoin will come back to the 40,000 to break you even? See, in this case, I would sell half at least, buy it at 8,000. So when it comes back to 40,000 on that particular trade, I'm already positive because I took half of it at the loss. I took advantage that risk. I bought it at low, came back to where I was, because if you bought as a long and it dropped to no matter where, the chance of it coming back to at least that price somewhere in the future, we're talking about 6 months, a year, 2 years down the road, is a huge possibility. And when I'm saying huge possibility, it is a probability of over 90%. So please pay attention because this is very, very important for you to understand that possibility of trading. I'd rather take a long and ride it to the bottom and then have it come back than taking a then buying a short and have it run to the top, and short will liquidate you earlier or later. But a long, as long as you do not go past 1x, it will never liquidate you because the dollar amount that's in your wallet supports the dollar amount that you're trading and allows you even to get down to zero and then recover back. Still, you're in good position and not going to get liquidated. So when I say zero, I mean as long as the price stays above complete zero. So let's say even if it drops down to uh, dot 0.00001, most platforms still will not liquidate you because you still have a chance of going back up. Now, that's the reason. Base explaining on a daily chart. Right now, we're gonna go back to the 15-minute chart so you guys can actually do how we would do that as a day trader or as a scalper or as I call it, a surgeon. You will get in within 20% of the whole trading range at the bottom of it. So let's say you get in, when it came down, you got in here, you took the ride with about 40% of the top of the upper area of the trading range is where you would actually set yourself a lim- limit take profit or order. See, we want to remove as much of emotions trading out of the situation as possibly can. That's why we plan every single trade. So when we planned out and we say, okay, we're trading this trading area, and with this trading area, we are going to actually trade within a within bottom 20 and top 40. So what you're doing, you're buying in and you're going to ride. As it starts reversing, you're like, you know what? I want to get out. You want to get out within that 40% range. So 40% would be within this range right here. So let's say you got out at 90, 90% of that range. So it'd be 10% of the top area. So you write it down. You set yourself up again for the 20% entry. And, and you will need to adjust your price as this trend line is slightly angled. So you're like, okay, I triggered a entry right here. Just right about 20%. Now, watch something very careful because you got in here. You never got to that 40% area. So you're trading. It kind of drops slightly below you, but remember you have 5% minimum at least, or for sure it's gonna never going to come back. So you never triggered a sell. It kind of bounced, came back again to your entry point, bounced back, came back to your entry point, and then check out. It took off. It broke out. But as it broke out, you're like, hey, I'm in positive. Now I can actually stay in a trade if it continues to trade. If not, I still will get out in the top 40% of the trading range. So yeah, I can actually stay in. So you actually pull your stop loss, and I don't recommend using stop losses until you're satisfied with the area of profit. Again, until you're satisfied with the area of profit. That's why when this thing breaks out, set you know set it right here somewhere, 10, 15, 20% from the top range. Set a stop loss right there, because now if it comes back, it has no choice but it has to trigger as long as you actually know how to use your stop losses. So in this case, we never broke out. It was a fake out. We took profit. So as we took profit, we set another order somewhere about 20% from the bottom. So as it came, and again, when I say set, we use a limit order to start a trade as well. So we take out all the emotions and feelings out. So while it's still there, we already set a entry position to get in. All it has to do is just has to come. The trade has to come to you, not you chasing the trade and trading the top. You wait until the trade comes to you. So when the trade came down, it triggered. Yes, it went a little bit further. You probably panicked, but again, let's use a ruler. So let's say you took it into 20% range somewhere, and actually it actually went down. It only went down 1.7%, so you never got triggered 5%, as we're talking about. Which is, remember, 5% is not the priority of the tool, of the rule. Actually, are we coming back to that area again? That's the priority rule in the near future. So if you put that as your priority, and then 5% as just a backup, you will have very little losses. And if you're going to have very little losses, you will be increasing your profit. What actually kills your portfolio is actually red, when you realize losses. Stop realizing losses. What I mean by realizing is actually selling at loss. Stop selling at loss. Stop realizing losses. Only start realizing taking profits. When you start taking profits, your portfolio will have a chance of 1 out of a 10. Yes, out of 10 trades, you most likely will be forced actually to take in one loss. But now think about 9 trades of profit. So even if one trade out of the 10 were actually huge loss, but you put the 9 profits, they actually, and you do it right, they'll actually outperform that one loss. And this is actually the trick of being successful. See, the market makers, they set this all up so when you're unexperienced, you trade the breakouts, the fake outs. Because with a fake out is when they actually can take your money, like taking a candy from the kid. They're taking your money. But now, when you become smart and you trade lows from low to top, now have them try taking the candy from you, taking your money from you. You're like, hey, I already made money. I still can get out at the top. Sure, have that $10 or that whatever, $50, whatever it is, that small difference of a half a percent or maybe that 1%. I'm still good with a 4, 5, 7%, or the whatever. If you're scalping, that's we're talking about maybe a 1% trade in between the range. So honestly, that's a 0.2%. Like say, hey, take the 0.2%. I'm still good with 0.8% profit. By the way, trading scalping, you need to find the best fee, the cheapest fees possible. And I'll be doing the video on that as well. There's a lot of videos I need to do, but this is actually training video how to be successful in crypto. So as you continue, it just dropped a little. Okay, it was only about what 1.5% we measured. You came up and you came up to another breakout. You actually, as you came up to another breakout, you set another stop loss in profit. That breakout turned out to be fake again, but you don't care, right? You're okay with the with the fake out, because when it started coming back, you trigger a sell again, and you actually put some money in your wallet or whatever you want to call it. Now we are actually in a situation, and actually this is actually the future from here on. So we came back, we never triggered the 20%, because 20% of the trading range is about right here or so. So you put it in order, you readjust the order, and you will continue readjusting the order until you get triggered again. But as the range becomes smaller, so is your profits becoming smaller. Eventually, you'll realize, you'll start having that feeling. Maybe I need to end and move on to another coin, because I got maximum I could out of this coin. Because right now that coin has a possibility of breaking down or breaking up, because we are having this pinned flag that's coming and closing in on me. The trades are becoming almost not worth the time trading, because it only has 1/4% earnings or 1/2% earnings, and you're looking for bigger than that earning. But this is the basic system of trading. Option number 2, you don't care about the breakouts at all. And this is actually one of the ways I personally trade. I don't care about the breakouts. I can always get in if the breakout continues, and lose that small percentage of the area that I was not in the trade. And I automatically set the trade up at about 10 to 20% from the top. So when I do come in from here and I come in, before you actually even the top, I'm already got my money in the bag. Now, let's say this breakout is for sure going to the top. Like in my situation right now, I got in. I didn't get in here, but I did get in somewhere in this area. Somewhere right here is actually I get in about top 40%. But I know actually we need to top out and at least can come back one more time to the high. So, and as well as there's a lot of for sure confirmations. People talking out there. There's a huge possibility that this actually will go break outside of this high. So what I do, I'll actually took the trade and I will ride it at about quarter percent from the top, which is about right here, is 11 dollar 12.5 $13 is what I'll actually set my take profit. I don't care if it goes any higher. I'm satisfied with what I have. Unless you have a trade and somebody says, hey, and you actually get the feeling of confirmation inside you that, yeah, that is going to 25, and you actually, based on the chart information and everything, you're like, yeah, we're definitely going to 25. Only then that you actually put that order for 25 take profit. Otherwise, be reasonable and be successful trader. Don't let the system rip you off from your money. Be smart with your money. Of course, the system that I mentioned to you does take time. You do need to, constantly update your entry points. Wait when that entry point is going to get activated. When it gets activated, you need to set that take profit points. You need to kind of be on top of what's happening in the market, that you don't get left behind. Let's scroll this, so you don't get left behind somewhere like right here. Yes, those certain things that you do want to, you may want to set, I'm not going to go with the 5% rule, but I will go, let's say, with the 20% rule. Or maybe you'll say, hey, I'll go with the 50% rule. So if it drops 50%, I'll get out in that case. So let's look at the Matic. Would we activate 50% rule if we took this drop right here? Oops, I'm using the wrong tool. So at 50% tool, you would have got triggered to sell somewhere in this range on this big candle. So you can say, okay, yeah, I lost 50% of my balance. I had a $5,000 balance. Now I have a $2,000 balance. Now, as we came down here, and you say, you know what, I'm gonna get back in. So let's study this area, because a lot of people say, oh, it's horrible, it's bad to hold, to even take a 50% loss. But let's actually examine what a 50% loss could have done for you if you took the 50% loss and you try to get in within the 10% or 20% of this candle. Let's say you got back in at the loss. Now you're riding back up. You kind of had to bounce. You root back up because again the 50% never triggered. And you say, you know what? I have a feeling this is as high as it's going to go, and you just cashed out. You just recovered with your $2,500. You lost 2,500, so you still have the 2,500. You got in, but right now you just recovered about half of your loss. You just recover right there about $1,500 on that trade from the bottom to the top. And you're like, you know what? I don't have a I have a feeling this is something weird going on. So you waited while it dropped, and you're like, you know what? I'm going to get in here. You took another trade. Right now you had $400,000. You took a $4,000 and you ride that ride again. And with that $4,000, this ride right here, you just recovered your last $1,000 that you actually took a loss. So with two new trades at 50% loss, you're already actually at positive. And then, you keep on doing, starting from the low, going up, starting from the low. You write it up, start from the low, write it up, start from the low, write it up. Now, by these rides, and within about a week later, or a little bit, a week and a half later, that $5,000 where you had the loss of 50% now actually turned to about seven, eight, maybe $10,000. So taking these lows, running up, buying lows, running up. Yes, days like these might be a hard days to trade. That's why you switch from swing trading in the way I'm talking about into scalp trading and trading the whole day, these small trades about half a percent, 1%. But end of the day, it's there's still possibilities of trading, and don't be scared to lose. And most important, when you get into the trade, let's say you got into this trade. Yes, it's not coming back because you got into the top. But if you got into the bottom of this trade, look how many days you had an opportunity to actually cash out at break even or at profit. Now you waited, it came back again. Look how many more days you had chance. All the way up to here, how many more chances you had to break even or take a profit. So let's go further to the right. This breakdown can actually, give you some ideas. And by this time you already understand we are in the downtrend, so you actually might be a good time to actually take a vacation. But there's also days where you can actually get in at low and take some rides. But let's say you did get in here and you didn't take advantage of getting out. Now you are kind of got stuck again with the 50% as we mentioned. Again, that 50% is not written in stone. You adjust the price, but cannot be smaller than 5%. For every person is different. Their feeling of the market is different. So you have to go with based on what you feel. But look at this right here. How much money can be earned in scalping right here? Just getting in low, getting out, getting low, getting out. This is a perfect right there. That's perfect tunnel right here. Perfect. Perfect tunnel. Get in. Look, get in option one. Get in option two. Get in option three. All these options, and you adjust your angle of the tunnel that you're going to be trading in as it goes, and you have opportunities. And I already mentioned, let's say you even got in here and you took the ride down. We already here. So the biggest question over, what we are looking into taking a drop again. So if you're looking to take a drop again, then you know, cash out, take your profit, and sit on sidelines. When it start dropping, be careful with a short. Remember, with short, panic if you have to. Get out if it's not going in your favor. You do not want to get stuck in a short when it skyrockets. If I had a choice to be stuck in a short uh, and it skyrockets or a long while it drops, I would choose 1,000 times long than a short. So that is something that my personal, and I already did the math, and it's dangerous to get stuck in a long when it's actually, I'm sorry, getting stuck in a short when it goes long in futures. So we trade here. If we feel it's at the top, get out. Take a couple days, relax, enjoy your time. Go spend that money somewhere that actually will bring you happiness. And when the market actually stabilizes and shows you where it's going again, get back in it again. If the market turns around, hey, take the ride down. Just be careful with shorts. When you're at the bottom, get out. Turn around your trade. Ride it. Let's say we're here talking about Matic, right? And here's zero. And let's say Matic actually flips and starts running down. Even if you took uh, closed your ride at the low of a 61.85, a short, you already made decent money right here. Now, even if you took a long and it came down to 20 cents, you you still will recover, and you're still going to be in positive when it goes past your entry point. Now, if you're not sure, you're saying, you know what, I do want to secure a position for myself, but at the same time, I want to be very, very careful. So let's say you have a $5,000 portfolio. Take out a $2,500 at 62 cents, and the remaining $25, keep it. If you start raising, put in the rest and take the ride up. But what if it continues going down? You can say, you know what? Okay, that 2,500 will probably equal to maybe 10 cents by the time we hit the bottom. And let's say we do even come down to 1 cent. And then from here we bounced. And let's say you entered at 10 cents to confirm that, this is the bottom. But, if we hit 1 cent, pretty obvious that's about the bottom of the bottom. Now, that remaining $2,500 that you left it on the side to keep it as an option to trade, of the just in case we do continue dropping. By the time we get to 60 cents, from 1 cent to 60 cents, that's a 60x on your $2,500. Now, you also recovered your $2,500 that you were in a trade in. So right now, that's that the 60x turned you into what? Geez, a lot of money. That's 120,000 roughly about. And then you recover just to your 1,200 as well. Bitcoin is dropping again. It's in pain. Yep, it's actually, see, as you guys can, it's pulling back to fill in that candle that I had. And like somebody asked me, what is the possibility? I said, hey, if we can survive 40,600, stick in the trade, because I doubt it will go any lower than the 46, but it definitely will be coming back to at least 44, 45. So let's go back to Matic. So yeah, trading these opportunities can actually make a big difference in your wallet. But you need to actually do it in a way where you do not realize a loss. Okay, The word realize a loss or realize a profit, it's actually an accounting and probably trading word that most of you probably don't understand. So let's say you got into a trade at a $10,000, and right now that trade is worth $12,000. So you have a $2,000 profit. But until you close that trade, that means those $2,000 have a chance of growing or reducing. So that's called unrealized. Something you have not actually put on books. You have not closed it. Because the minute you close a trade, right now you have a purchase price, you have a sale price. But if you have a purchase price but no sale price, that means the price is fluctuating. It's not realized. It's not put on books. It's the closing. It has not been done yet. So that's called unrealized profit or loss. So let's say you bought a $10,000, but right now the value is only $8,000. So you have a $2,000 unrealized loss. And the minute you sell it, right now it becomes realized. So unrealized always changes. It can be a negative, it can be a positive, it can actually change from negative to positive in seconds. But the minute you close it, right now it's permanent and it stays with you. It's on your books. And even if you don't even record your books, even if you don't write it down, it impacted your balance. See, while it was not realized, while it was not sold, it was impacting your balance, but it had opportunity to go up and down. It had an opportunity to become a positive or a negative. The minute you sold it, it became a permanent result on your balance. So realized is and not realized. So realized is what you sold and actually accepted it as reality. Not unrealized is what is still not a reality on your total balance. It is flexible. It still fluctuates. So you have an opportunity to make it realized or not realized. So it's very important not to close losses and make them realized. So if you have an unrealized loss, wait until it becomes realized, until it becomes unrealized profit, and only then, when you're satisfied with your profit, or you feel that is the high that you can take, or you actually pre-planned your trade, like you'll be doing scalping, and you actually set at the certain price that you're actually going to close it at profit. Try to close all of them at profit. If it's at loss, sit it out. Sit it out. Trust me. It's better off to sit out until it comes back to profit than to take the loss and then impact your balance to the point that you no longer can trade. New YouTube video. So again, I think I'm probably going to actually separate this video from the video of the beginning and use this as a trading video because it has a lot of valuable information here. So let's say we were talking about you got in here, or yeah, down here, and you came down here and you sold. So from here to here, you lost, let's say, $1,000 on a $5,000 account. Now, you got in the bottom. Yes, right now you have a $4,000 account, which right now you can actually churn that by 60. That's 412, 1220. So you actually can churn that into $240,000 balance. Great, smart idea. But what if you sold it to 60 cents and 55 is as low as it went? and you still were waiting and you start recovering. Bitcoin is continuing. I will set it at 41 and see what happens. But we are dropping, looks like. And we are dropping past my prediction. Not yet. Not there yet. So let's see what happens. Go back to Matic. So what if 55 and you were waiting for it to drop further, and right now it's at 65, it came up to 70, and you're still waiting for that jump, and that jump never happened. Now you realized this loss. You got in right now at 70 cents to take the ride, but you lost all this opportunity of income. Now, if you sold only 50% of it, and it came down to 55, and you have not bought it in, and it came back to 70, and you got in with that 50%, you recovered part of this money that otherwise you would have not have recovered. So that's why I don't recommend selling the whole thing unless you're for sure you're going in reverse and you're going far. That's why, if you got in here and by right here you already know we're going at least 50% drop, yeah, then sell everything. Save yourself that loss. If you can save this loss, do it. But if you cannot save this loss because you still were hoping for recovery and we came down to here, and then and that comes to your decision, sell at 50%. At that point, there's no point selling everything. Sell only half. That gives you still half to get to the bottom, wherever the bottom is, and hopefully the bottom is still deep. And by the time you come back where you sold it, you not have just recovered the money that you lost here, but you probably have multiplied those money by multiple times. At the same time, if it never went deep, you still have a chance of some recovery instead of no recovery whatsoever. And at the end of the day, you have not taken in a total loss. You only took 50%. You only realized 50% of the loss, while at the same time securing some money for recovery if it does go deep down. I hope this actually hour-long video, and I hope it makes sense for you guys. The secret of trading. And if you guys watch this video multiple times and actually put this video to use, what you learn in this video, I'm pretty sure you'll be able to afford to quit your job pretty soon. You'll get yourself eventually to a point where you no longer will be scalping $5, $10, $15, $20, $30, and you will start going and swing trading using similarly the same concept. But now, as a scalper, you learned the hard way, and you already developed feeling for the market. So when you start going swing trading, you'll be doing that just on a lot bigger scale. So I want to say blessings to you. I hope this video will be a blessing to you as well. It will change your and your family's life to better. And again, blessings to all.